This conference will now be recorded.
Okay, so when we were discussing about financial statement, I want the other people to answer it. I want you people to explain them what it is. So when we are discussing about the financial statement, what is that financial statement is? Let it be a friendly interaction. It is not like questioning, answering and all. So that they should feel comfortable. If they are having any doubt, they should come forward to ask. That is why we are just having the discussion. It is not like question answer session, girls. Don't have that thing in your mind. Okay. So what about Aditi and other
Ma'am,
girls?
it is a written record which shows the business activities and financial performance of the company throughout the year.
So throughout the year, means it is during a financial period. So financial period, as we all know, it is from April to March. So whatever the activities that it takes place, it can be purchase, sales, whatever the cash that is coming in, whatever the cash that is going out, every sort of activities will be recorded in a systematic way. And those recording are done in a different aspects. Based on that, we call them as financial statement. Okay, so financial statement can be grouped into three things. First one is income statement, second one is balance sheet, and third one is cash flow statement. So what does this income statement means?
Ma'am, it is a statement which shows the revenue or income and expenditure.
Okay, the ones who are there like Triveda and Shreya and Pooja and Catherine. Who was the other one person who people told? They are from Triveda, Pooja, Shreya. Okay, so now whoever is present. So just imagine you are running a business. Okay, you have started up with a business. So how you are going to move on with your business? So first you need to do the initial investment in the business, girls.
Yes, ma'am.
Okay, you are going to make an initial investment. So in that investment only you are going to bear all the expenses. So initially there will be expenses. Before I get any income, expenses will come in the picture. So expenses in the sense, what are the expenses that will be happening in your business? You don't think about this accounting terms and all. In generally, you think that now you have invested some 10 lakh rupees for a business. So you have made up your mind that you are going to start up with some business. So 10 lakh rupees is the investment. So what are the things that you are going to make up yourself ready for?
Ma'am, expenses on fixed assets and raw materials.
Yes. So first you will see the space. So either it is a shop or office or whatever it is, you will be hiring a space, isn't it? So that will be an expenses. Then you will be purchasing the fixed assets. So what are the fixed assets like?
A building, ma'am,
Yeah.
and machinery.
Yes. Very good. So it can be vehicle, land, building, machineries, and if I wanted to have a computer, furnitures, everything will come under fixed assets. So that is also an expenses, which will be taking it out from your initial investment, that is from your capital. Okay, then you will set up the business. So then you can expect some incomes or something. So first they told that it is revenue. So what is the revenue is? So just imagine we are doing some furniture business. Okay. So furniture, to make a furniture business, you have to make a purchase. So think that you are purchasing some 100 chairs. Okay. So 100 chairs, it will be costing like 1,000 rupees per chair. So how much is the amount for 100 chairs?
1 lakh rupees.
So 1 lakh rupees. So You are purchasing one chair for 1,000 rupees. That is your cost price, means the cost you have incurred, isn't it? So now if you are making a sales, you are going to make a sale of that 1,000 rupees only. You are purchasing a chair for 1,000 rupees per number. So you will sell at that price only.
No, ma'am.
So what you will do?
We'll increase some price to get some profits.
Yes, that profit is called as revenue. Means what, whenever the sales happen, the profit that you get from the sales, that is called as an revenue. Okay, so that is one sort of income. So is there any other ways of getting an income apart from the sales? So like I can be receiving the rent, or I can be receiving the commission, I can be receiving an interest, or I can be receiving an amount by selling my fixed assets. So this all are different type of income where money is coming to me in the form of cash. Okay, apart from sales. Okay, that is cash inflow. So cash outflow means the same way only. I might be paying the rent, I might be paying the salary, I might be paying the electricity bills and other ways where money is going out apart from purchase. Okay, so these are the ways where cash is coming in and cash is going out. Both the things it will be happening, and this everything will be showing it in income statement. Okay, so income statement will show where and all money is coming in and where and all money is going out. Okay, so next we are coming for balance sheet. So when you see, look at this structure over here, you can see two main things on the sheet. So one is liability and one is assets. So this is one simple example what we have given for a particular one is this is a balance sheet. There are certain components given in here. Using this, I have to create a balance sheet. Okay. So here balance sheet means I have liability and assets. So assets means what? Others, if you can tell what are assets are.
Ma'am, it is a property owned by a person or a company.
Yeah. Means whatever the things that add value to my business, those are in simple terms, if we have to understand, assets are the things which are going to add value to my business, because of which my business can be seen in a growth side. Okay, liabilities means where someone is owing on my business, means like example, I am taking a loan, or I might be paying, have to pay back to my creditors. So I'm purchasing, so one or the other time I have to pay them back. So where money is going on. Okay, so these things and all, it is liabilities. So here they have given one simple example where assets have been given and liability has to be as given. So here when we come at the end, both the values should match. Okay, so now I want you people to explain me what is cash in. Triveda, um, Shreya, Pooja, Hannah. So here already you people are able to see my screen, right?
Yes, ma'am.
Okay. See here the values with the components, it's already given here. I have to just take it and put it on whichever side it belongs to. If it is an asset, that will be coming on the asset side. If it is a liability, it will be coming on the liability side. Okay, now tell me what is the cash? Cash means what I have in my hand. So that is a current asset, which is in the form of cash. So current asset means it can be cash which is in my hand, or it can be the cash that is in my bank, or it can be the money which my debtors are supposed to pay. These are the ready cash that I have in my hand. Okay. So cash, how much I have the cash here?
35,000, ma'am.
Is equal to 35,000. So instead of putting 35,000 over there, I'm just selecting the cell. So here to do this calculation, everything, we are taking help of Excel, because Excel have a lot of functions and formulas which we have already done in the previous class. Anna? So previous classes, we have already learned what are Excel things that are there, what are the different types of functions, formulas and all. So in that aspect only we are following it here. So you don't get confused. What is this B3? B3 is nothing but B means the column and 3 means the row. So where both the point it is meeting, the value that is there, I have to put it there. Okay. So
Yes,
I'm
ma'am.
just taking it like this. So see now automatically 35,000 came in. So now tell me what is account receivable. Account receivable is nothing but the money that should come to me, the money that is coming in. So here just see in this components whether they have given anywhere this account receivable.
Yes, ma'am. It's
How much?
40,000.
So I'll select this cell, enter. And then inventories.
35,000.
It is 35,000. Inventories is like this. Okay. Other assets.
10,000.
So where is other asset? 10,000. Very good. So then land. What is the cost of land that I have?
1,25,000.
Very good. So then I have building also,
4 lakhs.
4 lakhs. Equipments. Equipments are nothing but the machineries that I have.
2,50,000.
Very good. So once this is done, see when I'm adding all the asset value of my business, it is coming around 8,95,000 worth of asset I have in my business. So now this, in this, what are the things that are going out from me? Okay. So here we are going to do it. What is account payable? Account payable is
50,000.
which I am supposed to pay. So account payable it is 50,000. Very good. Loans payable
1,25,000.
very good. Then total liability. So account payable and this one both I have to total it. So I am using sum function. So this two enter. So I have got my this one. So owner's equity. So owner equity is how much is the owner's equity? Owner's equity is nothing but the amount that is being invested. It can be through the form of share capital or an individual person investing the money, anything. Okay. So how much is the owner's equity here?
1,20,000.
Okay. So why should I take this one as a liability when I'm investing the amount? So you are the business owner, you are investing the money. So why that money should be in liability? Because whatever the money I invest today, so after that financial period means the duration, after 1 year, I will take back my capital, whatever I have invested. So once I take back means I'm taking back means the amount should be repaid to me. I'll take it back. So that is always considered as a liability only. It is up to me if I wanted to reinvest in my business only to make it like if I wanted to expand my business or add up any extra branch or something, it is up to me. But always the capital, the investment will be considered as a liability because the person who is invested, the owner of the business will take back that this one capital amount. Okay. So retained earnings.
6 lakhs.
6 lakhs. So girls, tell me what is this retained earnings is?
Ma'am, it is a kind of profit for the company.
Like how we can calculate that?
The profit of the company minus the dividend that is payable to the shareholders.
Yes. Like if I wanted to calculate the amount, whatever the profit I have got. So when I'm taking out all the expenses like operating expenses can include the salaries and other things, whatever the expenses will be there. And if I'm paying any interest, if I'm paying the tax or any other debentures is nothing but if there is any share capital in my business. So after sharing my business share capital and all, whatever the amount that is remaining in my hand, that will be called as a retained earning. Okay. So total equity. So sum, open the bracket, select this both, close it, close the parenthesis, enter. See, when I'm doing this one, both the values should match. Total liability is equal to total assets. Okay. So like this, we'll be creating the balance sheet. So now after that, we are having the scenarios being mentioned one after the other. So when we make this, when we implement these scenarios in my business, what are the changes that it is going to happen? So here, changes. Okay, in this first scenario, you can see whatever the cash it is there, it will be carried on over here as the same. So here it is mentioned that a company named ABC collects rupees 10,000 from its existing customer against the sale. Means now I was supposed to receive some amount, that is 10,000 rupees I was supposed to receive. Now I have got back that 10,000 rupees. So now how it should be added? What has to be done? Now I'm
Mom, it
getting
should
back
be
my
added
10,000.
in cash.
Yes, very good. Because I'm receiving 10,000 rupees. Okay. Then I'm telling that it has been received from the person who was already supposed to pay me. Means receivable. Okay. So from this receivable 40,000 rupees, I'm getting the amount. So here I should subtract 30,000 rupees. Means out of that 40,000 rupees, I'm getting back my 10,000 rupees. Okay. So minus 10,000. See, understood with this?
Yes, ma'am.
Okay. Anyone is having the doubts or anything, girls, please do tell. Don't hesitate. Second question. Company ABC purchased new equipment for its factory worth rupees 30,000 on credit. So on credit means what do that mean?
Ma'am,
On
loans payable.
not loans payable, it is account payable means I am purchasing the item. So instantly I am not going to pay the amount. I will be paying the amount later. So that will be my account payable. Okay. So equipment. So here equipment. So equipment, here you can see equipment is being bought 30,000 rupees. So I already have an equipment worth rupees 2.5 lakh. So in this, I'm going to add more 30,000 rupees valued equipment. So I'll add 30,000 over here. So now I'm not paying the amount instantly. I'm not paying the amount. I'll be paying it later. So that will become as account payable. Account receivable means where the amount is yet to receive. Account payable means where the amount is yet to be paid. Means now I have not paid it. So here account payable. So uh, equipment is coming in worth 30,000 rupees and I am supposed to pay them 30,000 rupees. So here account payable will be added with 30,000 rupees. Like for instance, it is already 50,000 rupees I have, okay, which I am supposed to pay. So on this, whatever the equipment that I have bought should be added. Means this amount also I am supposed to pay. Where this difference is coming. So when I'm adding it for the payable, automatically my liability value is also getting increased and asset value is also increased. Means asset, it is coming in the form of an equipment, a machinery. Okay. And this amount I'm supposed to pay, which I have not yet paid. Okay. So next scenario, received order worth rupees 5,000 from its customers in exchange for an expert supervision services. Understand the question here. Here we are just receiving the order. I have not yet provided any services still. So here no changes will be implemented until unless a physical activity is being taken place. Okay, it is just an order what I am receiving. Okay, so here no changes will be done. Girls, you people are able to understand, right? Triveda,
Yes, ma'am.
Pooja, and Shreya, if you girls are there, and Hannah. Okay, we are going for the fourth scenario. ABC made an expense worth rupees 3,000 to pay a vendor's bill. Means, so here I am paying 3,000 rupees cash to the person to whom I was supposed to pay. So what should be done over here? So here I have the cash of 45,000. Okay. So in this I am taking out 3,000 rupees. So 3,000 rupees, if it is going, it should be subtracted minus 3,000. Enter. Okay. What I am paying, the amount which I was supposed to pay, means account payable. So here the amount will be getting reduced with 3,000. Understood? Girls?
Yes, ma'am.
Okay. So here ABC raised capital by issuing shares to public worth rupees 1 lakh. So here I am telling that the company has been raised with the capital by issuing the shares to public. So I am receiving the capital amount in the form of cash. So cash is coming in. So cash is coming in means I should add that 1 lakh rupees to the amount, the cash amount. So when it is coming in, it should be added plus 1 lakh rupees. Okay. So what is coming in? It is an owner's equity, means the investment, the capital, it is there. No. So this is in the form of share capital, means I am collecting it from the public in order to expand my business or for some requirement. I'm issuing the shares and I'm collecting the money. So here it will be considered as an owner's equity. So here also I need to add that amount because the owner's equity is getting increased with 1 lakh. Okay. So here when I'm making the changes, you can see my total liability should be equal to my total assets. Okay. So the next one, ABC purchased raw material of worth rupees 12,000 on credit. Just 1 second. So here you can see in the sixth scenario, ABC purchased raw materials of worth rupees 12,000 on credit to produce its goods and services. Means we are purchasing the raw materials. So raw materials is nothing but called as inventories. Inventory means the stock item, the raw materials, whichever I have. So that will be considered as an inventory. Okay. Okay, so this amount, it is coming in the form of raw material, which I should add it in the inventory. So inventory, it is already 35,000 I have. So now I should add more 12,000 in this because I'm purchasing the raw materials. So now I'm telling that I'm purchasing the raw materials, but I'm not paying the amount instantly. I'll be paying it later. So that will be coming under my account payable. Means account payable will be increased with 12,000 rupees. Okay. Next we have the last one. So here the equipment was purchased was worth rupees 10,000 by cash. So I am paying the cash to buy an equipment. So money is going out from me. So I have 1,42,000 wherein 10,000 rupees amount is going out. So it should be subtracted minus 10,000 and equipment. So equipment is just getting increased. Equipment is getting increased with 10,000 worth of goods. So 10,000 will be added here. So here, this is how the balance sheet with simple changes we are going to make. Then understood with this?
Yes, ma'am.
Let's go to the balance sheet 2. So here I have not mentioned what are the current assets that should be coming, what are the current liabilities that will be coming. I want you people to tell me what are the things that should come on the current assets and what are the things that should come on the liability side. Okay. So first will be cash and equivalent. So cash and equivalent should be coming here. The amount is equal to this amount will be coming here. Okay. First let's put the components, then we can put the values. So next one, assets. So that will be inventories. I'll copy this cell and paste it here. Inventories will be coming on the current assets. Then I have short-term investment. Means it is also an asset to my business. So let's select this cell and copy it here. Short-term investments. So now receivables, that also will come on my asset side. And prepaid expenses. So where this should come? Yes, prepaid expenses.
Ma'am, current asset.
Very good. Then long-term assets. It will also come on my asset side. So goodwill. My goodwill also come on this side only. And my equipments. So that also will be coming on my asset side. So now on the liability side. So here are the things, whatever it is remaining, that will come on my liability side. That is short-term debt. Debt means it is a loan which I have to repay. That will be coming under the liabilities. Account payable. It's also a liability. Long-term debts. Then we have deferred long-term liability charges. Then we have other liabilities. And we have owner's equity. And we have retained earnings. Okay. So now I have already put the components, everything. So you just keep doing this one. You do this values and try to solve this third one, third balance sheet. Okay. So here already the components are done. So I'll give you 10 minutes of time, girls. I'll just come. You keep doing it. Okay. Give it a try. Once I'll just explain you. I'll give 10 minutes of time, girls. Girls, are you people able to do it? Girls, are you people there?
Yes, ma'am.
Okay, this is Aditi.
Yes, ma'am.
Hannah, Pooja, and Shreya, Triveda, are you girls able to do it? You are getting any difficulties or something, getting confused, please do tell.
Yes, ma'am.
To try it with this balance sheet 2 and the 3 also you people try.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, for balance sheet 3, the
Yeah.
net sale and the COGS are 10,000. Both the figures.
Which one you tell me?
Case 1, like the
Yeah.
sales is also 10,000 and COGS is also 10,000.
How it will be? So computer, no, no, bought books. So here we just put it like this. So this purchase. So purchase, how much we have bought? 100 books at the rate of 100. Then sales. Sales, 50 books we have sold at the rate of 200. So COGS purchase will be is equal to 100 into 100. That will be 10,000. So COGS, this is purchase. So COGS, how we will be doing it, is equal to 50 into 100. 5,000, no?
Ma'am, it's
See, the
50 into
quantity.
200.
No. COGS. How do we calculate COGS? You tell me. The quantity that
No,
is sold. Cost of
no,
goods
ma'am.
sold, right?
I'm
Hmm.
talking about sales, ma'am.
Sales, it is 50 into 200 only, ma. So sales, then sales value will be is equal to 50 into 200. That will be 10,000. So COGS, what is the thing what you have to put? COGS will be 5,000. Sales will be 10,000. So gross profit, what I am getting is 5,000 rupees. What about the other people?
Ma'am, can you explain the COGS part?
See, purchase. Here they are telling that bought 100 books worth rupees 100, means 100 books I have bought at the rate of 100 rupees. Okay, this is my quantity and this is my rate. Okay, so when I am doing this, it will be is equal to 100 into 100. Okay, that will be 10,000. So I'll remove this over here. Okay, now sales. Sales, I am telling that I have sold 50 books at the cost of 200 rupees. So is equal to 50 into 200. That will be 10,000, isn't it? So purchase I am making it for 10,000 and sales I am making it for 10,000. To calculate the COGS, how I will be doing it would be, see, is equal to, so how many quantity I have sold? I have sold 50 books, isn't it? Into, so the cost what I have been spent for that 50 books is 100 rupees. Means 50 books, each book I have bought it for 100. So 50 into 100. So that will be 5,000. So if I tell that my sales is equal to 50 into 200, that is 10,000. And what is the cost that I have incurred to buy that goods, whatever I have sold? So how much I have sold? It is 50 books into the cost what I have paid for that purchase. So cost is 100. So 50 into 100. That will be my COGS. So gross profit will be sales minus COGS. It is 5,000.
Okay, ma'am, got it.
Okay. What about Triveda, Catherine, Pooja, Shreya? Understood of this one? You want me to explain it?
Understood, ma'am.
Okay.
Excuse me, ma'am.
Yes, ma'am.
Ma'am, in income statement, what about depreciation, ma'am? What should we put
Depreciation.
there?
See here, it is said that computer purchased worth rupees 20,000. So here we have not given the depreciation value. So here when I come, see it has been told that the equipment value life is for 4 years. Okay. So 20,000 divided by 4 is equal to computer. What I have purchased is 20,000 worth. So divided by 4 will be 5,000 rupees. So here, for instance, it is not mentioned anything. If you look at the question. So let's not mention anything over here. Just do the sum like that only and see. Because they have told that the computer is used for 4 years, but they have not given any depreciation value. Once again, girls. Girls, done?
Ma'am,
Yes, ma'am.
in balance sheet, ma'am, they didn't mention any cash, right?
Any?
Cash, ma'am.
Cash. So cash it is
Uh,
mentioned. No, first only it is mentioned rupees 1 lakh capital infused in the business. So that is the cash what I
ma'am,
have.
oh, ma'am, then what about equity capital, ma'am?
Equity capital that will be 1 lakh only. See here.
Oh,
Okay.
okay.
Is everyone tried with this? Girls?
Yes, ma'am.
Okay, let me try to solve it because she's getting a bit of confusion how the thing has happened. So, okay, so here we are calculating this balance sheet for 1 month. Okay, so it is just for 1 month and they have mentioned the dates. So you can see it is just for 1 month. So here, when we are talking about the capital, okay, so capital here, I'll put this here in the capital. Equity capital is equal to 1 lakh. So 1 lakh equity capital is there, and here I'm going to show cash. Okay, so on this side is equal to 1 lakh, enter. Okay, so now I have to tell. So whatever the expenses that are happening or whatever the amount that is coming, I have to mention it this side. So here computer is coming in asset. So here next one, if you see computer purchase worth rupees 20,000. So is equal to 20,000. Enter. So when I'm purchasing the computer, my cash is going out, isn't it? So when I started my business, I had 1 lakh rupees. So in that, first I purchased the computer. Okay. So from the cash, 20,000 is going out. So I'm showing this 20,000 in minus. Minus means cash is going out. Okay. So next, advance rent paid rupees 10,000. So 10,000 rupees is equal to 10,000 rupees advance I am paying. Okay. So here again cash rupees 10,000 is going out for advance. So deposit. Next, I have made the deposit. So advance I have paid 10,000 and I have paid the deposit of rupees 20,000. So is equal to 20,000. This is my deposit what I have paid. So here also cash is going out. So minus 20,000. Okay. So now buy bought books worth rupees 100 per book. Amount paid after 30 days. So here I am telling that I have purchased it. The inventories, isn't it? So inventory, I am purchasing 10,000. Okay. So that will be my inventory which I am purchasing is equal to, I'll open the bracket, 100 into 100. Okay. So here I am telling that the amount will be paid later. So amount will be paid later. So paid later means payable. So how much I am supposed to show? So payable is I am purchasing the items, but I am paying it later. So payable is 10,000. Okay. So now sold 50 books for rupees 200 per book. So amount is received in 30 days means this is again credit sale means they are taking the items from me. I'm making the sales, but I'm receiving the amount later. Okay. So for that, so once I'm selling the goods, so the inventory that is in my hand now, stock in hand will be minus 50 into 100. Understand this, girls? So inventory first I am showing the purchase. That is 100 into 100 means 100 books I am purchasing where the cost of each book is 100. Okay. So that time I got 10,000 rupees. Now I need to show the inventory. Inventory is nothing but the stock that is there in my hand, stock in hand. Okay. So then I am showing this COGS. COGS means what is that? So 50 books I am selling. So now I haven't received the amount. So I will be showing that the cost of that 50 books, what I have purchased, the purchase date, 50 into 100. Okay. So now the inventory that is there in my hand is 50 books. So the cost of that is 5,000. Okay. So now sales. So sales also, I have told that I have made the sale, but I haven't received it. So the amount is yet to receive. Which one? So 50 into 200. 50 into 200 means 50 books I have sold at the rate of 200 per book. Okay. So now this is done, this side. So now I have to show the EBITDA. So EBITDA is nothing but this value, gross profit, whatever it is there. So that will be my EBITDA is equal to E6. Enter. So depreciation. So depreciation, they have just mentioned it for 4 years. So I'm not going to calculate as they have not mentioned at what rate it has been decreased and all. Okay. So now my EBIT. So EBIT will be gross profit minus my EBITDA. Sorry, EBITDA minus my depreciation. So that will remain as it is. And here there is, so here I'm not going to give any value. And interest, have they mentioned any interest rate here?
No, ma'am.
No.
No,
So
ma'am.
that will also remain 0. Okay. So now my retained EBT will be is equal to 5,000 minus 1 second. Please. So that will be 5,000. So now PAT will be is equal to interest minus 5,000. So retained profit will be is equal to, so here it should be positive. EBT, I'm taking it as it is. Now what else is left? So the cash. So cash here. So after making all the expenses, I have this much of cash in my hand. So here, whatever the cash that is there in my hand, this will come on the asset side. See now, my liabilities and assets both are matched. So understood with this?
Yes, ma'am.
Okay. So next one, I want you people to try it out. Just remove the values. This is also the same way only. The amount columns you people remove it and try to do it. So here if you see, this question is a little bit twisted. where you can see the purchase has happened twice and the sales also has happened twice. I have shared you this one where I have done the answers, everything, I believe. Yeah, it's already done. Girls, are you able to understand, follow it?
Yes, ma'am.
Okay. So I want you people to try out with the second and third sum. Okay. Just answer your attendance, girls. Saida,
Present, ma'am.
Trisha, Trisha, Harina,
Present, ma'am.
Nivedita,
Present, ma'am.
Janet,
Present, ma'am.
Sirisha, Sirisha, Pooja, Pooja
Present,
Shetty,
ma'am. Present, ma'am.
Deepti, Deepti,
Present, ma'am. Present, ma'am.
Mansi, Mansi, Akshisha, Tanisha,
Ma'am.
Shreya,
Present, ma'am. Shreya.
Pooja, Prabjot,
Present, ma'am.
Bhumika,
Present, ma'am.
Aditi, Triveda is
Present,
present,
ma'am.
Anna is present. So
Present, ma'am.
absentees are Trisha, Sirisha, Mansi, and Akshisha. These 4 girls are absent. Okay, Hannah, I have given yesterday's this one also present. Yesterday you were there, right? Hannah Catherine. Okay, girls, I wanted you people to try this out. So tomorrow we'll continue with the other this ones balance sheet. We'll just first we'll sort out with these things. Try to do it. Okay. Thank you, girls. See you all tomorrow. So today, I think we couldn't cover up with most of the concepts and all. Okay, tomorrow we'll see. We will move on ahead and we'll cover up with the other concepts and all of balance sheet, whatever it is remaining, we'll cover it up. Okay. Thank you.
Thank you, ma'am.